Up with the reports as Prashant Tandon of Tata 1MG. Moving on, manufacturer of electronics, home appliances, IT and mobile accessory brands, Elista has announced that it would be investing 250 crore rupees in setting up a manufacturing plant in Andhra Pradesh. Spread over 1,32,300 square feet, this state-of-the-art plant will have a production capacity of 10 lakh TVs and 10 lakh LED monitors annually. To elaborate on the roadmap ahead at Elista, joining me now is its chairman and managing director, Saket Gaurav. Saket, welcome back to Startup Street. Now, the investment in the manufacturing facility, I believe, will be spread across 5 years. So first, tell me, when will the plant be operational? And then if you could take me through phase one, what will be manufactured and in what capacity?
Thank you very much, Shruti, for having me in your program once again. The total investment of 250 crores is going to take place in phased manner. So phase one will start from April 2024, wherein we'll be investing around 50 crore rupees. And this manufacturing plant will be able to produce around 1 million sets of TV and 1 million sets of monitor, as you said. So this is going to be the phase one plan. This plant will be operational from Q1 of 2024. We recently signed this MOU with AP government in the Global Investor Summit in Visakhapatnam earlier this month. So this is the plan in phase one.
Okay. Saket, through this expansion, you're not just scaling your production capacity, but also seeking to offer better and more technologically advanced products globally. So tell me what's new. I believe you already have chalked out plans to manufacture washing machines and dishwashers as well.
Yes, that is going to be in phase two, wherein we'll be investing into manufacturing washing machine, dishwashers, and refrigerators. Now, coming back to TVs, this capacity is going to be sufficient for our own brand, which is there to take care of domestic India market. But at the same time, from next year onwards, we look forward to getting into international business from our own manufacturing plant. We launched our brand in UAE last year in December. But currently, we are able to supply to that to the international market through the other outsourced manufacturing vendors. So we look forward that from next year, our manufacturing plant will be operational and we'll take care of our international business as well.
Saket, what are your revenues from operations currently? Which are your biggest markets? Also, you're forecasting a top line of 1,500 crore rupees by 2025. What makes you bullish? And if you could also talk to me about your growth plans for the year.
Well, it doesn't make me bullish because still the numbers that we are talking about is very conservative.
Okay.
The export market is the main key area that we wanted to focus on. Making in India for the world, as our tagline suggests. We'll be, producing TVs, and that we'll be exporting to international market. That will, start from UAE, which is going to be the base country. So if we look at the even if we are able to take 1% of the market share, which is really very conservative, we still touch around 5,000 crores. So I reduced this 5,000 by 3 times, and we set a plan of 1,500 crores, which is very much doable.
Okay.
This number can be attained in around 3 to 4 years from now. The manufacturing boost is going to, aid to this plan. So
okay.
This is about that.
Yeah, going back to the partnership that you have with the government of Andhra Pradesh, Andhra Pradesh is known for its ease of doing business and is emerging as a manufacturing hub. Through this new facility, you're looking to generate employment for 500 people. So what is the kind of impact you're hoping to create?
See, this facility is key, point in our ambitions of getting into manufacturing in India and Atmanirbhar Bharat project. The ease of doing business in Andhra Pradesh has been consecutive 3 times, I think, best in the country, if I'm not wrong. The government is really very supportive. Before even the manufacturing plant could be started, all the infrastructure is in place. The best part that is going to, add value to our ambition of international business is its closeness to Chennai port. We are almost 250 kilometers away from the port. So these are the key points wherein I believe that this Andhra Pradesh project will support us for our international export business as well.
Okay, one final question, Saket. Elista, like you mentioned, has recently kick-started its operations in UAE and CIS and is mulling an entry into other key markets in the MEA region by next year. Take me through your growth and expansion plans, your global plans.
See, globally, the group is already based in Dubai. We have been operating in Dubai for almost 15 years now. So we just wanted to add one more brand to our portfolio of distribution from UAE. The growth plans we are heavily relying on many other markets, which is Africa, CIS, and other parts of GCC.
Okay.
The quantity required, the rate of growth of smart TV business in all these areas is huge. So first was to create a brand, which we did 2 years back.
Sure.
Now we already have certain numbers. Now after this, the next step is manufacturing.
Okay.
So I believe we'll be able to take care of this 20 lakh sets, which will contain 1 million, 10 lakh sets of TVs and 10 lakh sets of monitors. And this can be consumed by Elista.
Okay.
So currently, our consumption for TVs is around 250,000 units per year, which I think in coming 2 to 3 years can be doubled or even tripled.
All right. On that note, we'll have to wrap up our conversation. Saket, wish you the very best and many thanks for joining us on Startup Street.
Thank you so much, Shruti. Thank you very much.
On to a CNBC-TV18 exclusive blaming the SVB crisis on poor risk management. Girish Mathrubootham, the co-founder and CEO of Freshworks, said SVB-like situation can have a cascading effect mainly on the banking system. He also added, he spoke to our colleague Jude Sanith on the sidelines of the completion of his passion project, FC Madras Academy. Take a look.
Only fair to say it's definitely a dream come true moment. And FC Madras has been one of my passion projects. It's the charity that I run for youth football, especially kids under the age groups of 13 and 15. So we started this sometime in 2017 where we wanted to create some infrastructure for the children to have like good playing facilities. We started small, renting out a ground in Thorepakam, Chennai, and while that itself was a very happy place for the children and the parents, and we thought, okay, why not really create something truly world-class? We've been working on this project for more than 2 years. I would say it's record time in 2 years from buying the land to what we see here.
What kind of investment did you put into this facility? And, you know, I know it's not as simple as an investment and return game, but what do you really expect out of that investment? And what is that investment to begin with?
See, I truly believe the purpose of money is to serve society. Like we are probably completed, I would say, phase 1 of the project. We spent a little over 100 crores. Again, when I say we, it's my personal charity that is funding all of this. So the charity will take care of all the 55, currently we have 55 children in the Elite program. We are ramping it up to 75 by June. So the entire expenses for the children in terms of their football training, in terms of their education, their accommodation, food, everything is taken care of by the charity. So the capex is done from me on a personal basis, and we have bigger plans. We have to now get this self-sustaining to be operational. And
shifting focus very quickly to where we find ourselves today in the startup ecosystem. There's been a period of downtime, so to speak, even as this winter of startup funding really has been spoken of a great deal. It's been gone on for more than a year and a few months right now. Do you see light at the end of the tunnel really with regard to where we find ourselves today in the startup ecosystem?
See, I always believe that these are cycles, right? See, if you call this a winter, then what would you call 2020 and 2021? That is super summer, super long summers, right? So we had a lot of money being available. So if you compare with that, yes, it's winter. If I compare with 2010 when Freshworks was founded, I think this is not winter. This is spring and summer, because like, you know, most VCs wouldn't even come to Chennai in 2011 or 2010. So I think these are cycles.
Absolutely. But, you know, given the fact that events like the SVB crisis that have recently come about, I know for a fact that you are sufficiently insulated against it. In fact, the press release said that you'd hedged your, you know, deposits, so you weren't entirely reliant on SVB. But the fact that this has taken place at this time and place where we're already in a dark space, is there a sense of concern or worry that should this happen in one bank, it could possibly happen again, and a black swan event like this could perhaps see more such smaller events worsening what is already a dark situation?
Yeah, no, what happened with SVB was really crazy. And again, to be clear, it was not, I think it was probably, you would say, poor risk management on their part, right? Because all their investments are in bonds, which are supposed to be safe. The only thing is it's all long-term, not liquid. So, and this is cascading. As we speak, we are seeing other banks getting impacted. And especially from an Indian startup standpoint, I know so many startups who actually parked all of their funds with SVB because it was so much more easier to open an account, and SVB was friendly.
news has just emerged that you conducted another round of laying off a few employees. The number isn't quite out as yet, but how has that impacted numbers in terms of workforce at the company?
Numbers correctly. Like we hired like over 1,800 employees. So we have hired a lot of employees. So, and when you're growing at that pace, sometimes like there are overlapping roles. We do reorganizations for more efficiency. So we are always looking for efficiencies. And sometimes when we see that, we have to kind of make sure we do the right thing for Freshworks.
Right.
All right, on that note, it's time for us to take a short break. But coming up next, the Ayurveda company raises 100 crore rupees in a mix of equity and debt. What's the company's fund allocation plan? We'll tell you on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. D2C brand, the Ayurveda company, backs 100 crore rupees in a Series A funding round led by 6 Sense Ventures. The funding round of the omni-channel Ayurvedic lifestyle brand also saw participation from actress Kajal Agarwal, a few notable startup founders and venture debt funds. Joining us now to discuss the fundraise and the fund allocation plan is Param Bhargava, the founder of the Ayurveda company. Param, thank you so much for joining us on the show today. Like I said, you've raised 100 crores in equity and debt. How much of it is equity and how much debt? Why did you decide to take the debt route?
So we have raised 75% of the round as equity and 25% balance as debt, right? As the market has been changing for the direct-to-consumer brands and the new norm is being omni-channel, and in omni-channel, the requirement for working capital increases, right? Where you have to fund your inventory. And the round construct is also, it's a convertible round. We would be raising another 150 to 200 crores in next 10 to 12 months. Just to scale up and extend our runway, we decided to add on a 25 crore debt lines from our certain good venture debt funds.
All right. And how do you plan to use these funds? What's on top of your agenda?
So agenda is very simple that we are looking at a roughly 30 to 35% growth on a month-on-month basis for the new financial year. The deployment of this capital will go into first building our tech. That is, we would be revolutionizing the Ayurveda space by introducing a new age Ayurveda app, which solves the purpose of driving digital content and consultation around Ayurveda and driving the consumers to the commerce from consultation side. Then the other bit would go into strengthening our supply chain and investing capital onto our R&D facilities and product development facilities.
All right. You also have Ayurvedic products across skincare, hair care, and makeup. What's the traction that you're seeing for your products? What's your best-selling product?
So the eventual plan is that we become the house of entire Ayurveda offering, right? That's why the name also is the Ayurveda company. But as on date, the larger focus currently for first 2 years is that how do we really become a large skincare and hair care brand? Similar trend is also visible in our current traction and in our current numbers. We roughly have 45% revenue coming in from our skincare range, where our Kumkumadi range for face care is our top selling range, where we do 8 to 9 top selling SKUs, including our Kumkumadi face oil, face wash, scrub, day cream, night cream, and sunscreen. Kumkumadi primarily is a skin tightening, youthfulness, and radiance related ingredient, which gives a lot of benefits to the consumers. The second best-selling range is our hair care range, which is for our anti-dandruff called Methi hair care range, which is a very strong ingredient, fenugreek, which is used for anti-dandruff to control the dandruff, right? So 21% of our revenue comes in from a hair care segment. Remaining 14% currently comes in from our health and wellness, and predominantly within health and wellness, sexual wellness is our large category, the Shilajit segment. 5% of our current revenue comes in from our baby care range, where Kajal is also an investor as a brand ambassador. And the remaining 8 to 9% is the newest Ayurvedic makeup segment, where Kajal, Sindoor, and liquid lipsticks make the balance revenue.
So skincare currently doing the best for you. You also said a lot of your funds would go towards expanding your offline presence. So what's the mix between online and offline? Will the focus going forward be on the offline presence?
Yes. So as on date, we are roughly 55% online and 45% offline. Going forward, for the next financial year, we are targeting that the mix will completely change. It will be almost 60% offline and 40% online. We currently operate a decent sized footprint. We have 18 to 20 our own kiosks across India and top malls. Other than that, we have 500 plus Ayurvedic beauty advisor counters and 2,000 plus supplies to non-manned counters. This would really grow in next 1 year to a large number.
So your offline presence will be bigger than your online going forward. But what about revenues? Where are your revenues currently? Where will you finish this year? What's the road to profitability looking like?
So this year for the entity level, revenues would be approximately 60 odd crores for the entire financial year. This is the full first financial year. FY22 was our main starting year where we did roughly 12.5 crores. So we have delivered approximately 450-500% growth in this year. Definitely there is slight burn, which is not that high. We are roughly at minus 18% consolidated on the EBITDA level. We are targeting approximately 180 crore on the top line for the FY24. By when we would be closing the next financial year, that is the last quarter, we expect to become break even.
All right, Param, many thanks for joining us on the show today, and we wish you all the best going forward.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.